All right, guys, I just want to cover the updates that I just recently did and answer some questions about the previous updates with the clouds. So, on the wolf chart, I spent a little time coding this weekend because from talking to some of you guys, I realized that just having the stock stop loss was still making us have to kind of take our time and slow us down in trading, trying to figure out the math behind the stop loss for your option contracts. So right now I have uh, the IWM chart pulled up, and I just want to show you what I upgraded in this ATR tracker. So basically, right now, so one thing I reorganized it, so it is in a different order format. Um, where we have long stop loss originally, I put long and then call, so that some people that's brand new to trading, when you see the word long, that just means like a call, or you're expecting the market to go up. And then short, I put short put stop loss, right? And then here is the option contract stop loss. So if you're on whatever time frame you're on, though, it's going to adjust itself based off of that dynamic stop loss level. So there's a couple of things you want to know about the stop loss for the ATR tracker. So let me go to a 1 hour time frame. All right. So the first thing you want to know is that the stop loss is based around the ATR, and that's the average true range of the stock. And so per time frame, so the hourly counter will move $1.97. So if you double click on your ATR tracker and go to the inputs tab, then that's going to put you in the wolf chart, settings. On the inputs tab, you scroll all the way down to where we can manage our ATR tracker. And so right here where this ATR multiplier is right here, this is how you set this is the multiplier by which you set your stop loss range in. So if you wanted a tighter stop loss, so if you wanted to stop, let me start here. If you wanted the stop loss to be exactly the ATR of the 1 hour time frame or whatever time frame you're on, you would just change the stop loss to a multiplier of one. So that would give you a 1-for-1 match. That'll put your stop loss $1.97 below your entry price on the 1 hour time frame. Now, it's a thing called liquidity grabs and stop loss hunts in the market. And so normally if you put your stop loss in the wrong position, you can easily get stopped out when the stock just has normal volatility. So if an hourly counter moves this amount down and you're in calls, it can just push you right out of your position if your stop loss is too tight. So if you don't know how to set a stop loss, if you experience setting a stop loss and as soon as you set it, the stock price will be moving around, it'll push down, kick you out, and then it'll shoot up. That means that your stop loss is being set in a weird spot or right too close to a normal support range. And then that's smart money pushing down and triggering your stop loss on purpose to create liquidity for them to buy a position. So the ATR helps us to avoid that. So when you set the stop loss as slightly outside of the range of the normal volatility of the stock candles, then it gives you a better stop loss, right? So I'm just going to set it somewhere above one. So now down here where it says option delta. So whatever option contract you're looking at, you would have to go and get the delta of that contract and manually input it here. So let's say the delta was zero point 0.6, right? Or 0.62 or whatever. Just type that number in here and that'll give you your delta on the contract. And then you want to come here and you want to type in, okay, how much did you actually pay for that contract, right? So you might have paid, let's say you paid $278. So you put it in, it's like 2.778, right? So you put it in just like you would do it on a broker. 2.78, hit that, and then click OK. And then you see over here, it's basing my stop loss now off of this stop loss for a call or a put. Based off if you bought a call contract or a put contract, it will put your stop loss in down here now with that calculator in there. So all you need is the delta of your contract and how much you paid for it, and then it'll put it over here. Okay. Now, what if you have a contract and you're already in it and you don't want to get a dynamic stop loss? You can then come here and you can put your entry price. So say if you entered into the stock, the current price is at 205.95. Say you entered in a while back, um, say you entered in at like say it went to 203 when you got your entry, right? And so you want a stop loss, and you got the same delta or whatever, and you paid the same amount for that contract. You can put in a manual entry on the contract, and then it'll give you the static stop loss. So it give you, okay, if you entered in at 200, right? I mean, a 203. This is the stock stop loss for a call or a put, and then it'll adjust your contract stop loss. So if you were getting in at a lower price. Okay. So you can handle it both ways. You can do this for stuff you're already in the position for. You want to know what the stop loss should be and things like that. Okay. So we had the stop loss stuff built inside of this now. And so we got that nailed down. All right. The other update that I did to the chart is I added some alerts to the chart. So now on the ATR tracker, you know how it normally, if we go to like a daily time frame, for example, um, how we have when the stock is breaking out, how IWM came into demand, and then it started pushing up for most of the part of the day. It came all the way down as low as 201.75, and then it pushed up as high as 207, and then it had a strong momentum breakout um, in the direction of the trend, right? And so a lot of times stocks don't. Some stocks have that, and some stocks don't, right? Some stocks won't have a strong breakout. Some stocks will, and so it's up to us to try to find, which stocks have that momentum. I know a lot of things went up um, during the market hours on Friday after they reversed, but you see how Verizon, it went up, but it didn't, have a strong momentum breakout. It still had a good aggressive move and a nice candle. So what this will allow us to do is you go to your daily time frame and some of the stocks that you normally trade, saying you can right click, go to add alert on Wolf chart. And now if you just select once per bar, right? And where it says internal bullish break of structure, this BOS, you can hit this drop down. And now you can actually add alerts to the ATR volatility alert, which is going to take it. So it's going to let you know when something's having an aggressive move. And then you can set an alert on this breakout alert too. So when something has strong momentum or an aggressive move, once it triggers, you'll get an alert on it. Okay. And so we have that alert built into the chart now. Also, with the supply and demand zones on the chart, the order blocks, um, I did modify the colors slightly. So when you're dealing with order blocks, if we go back to this right here, so we have internal order blocks and then we have these swing order blocks. Now, the difference between a swing order block versus an internal order block, it deals with your smart money concepts of basically like a change of character versus a break of structure. A swing order block normally comes into play when a stock is in an aggressive downtrend and then money comes in and completely changes the stock from a downtrend to an uptrend. Okay. So that's a swing order block because it comes in at that swing low and it's the stronger of the order blocks, right? So you coming in and you're taking a downtrend, a consistent downtrend, and then switching it into an uptrend. Now, the internal order blocks, they are continuation order blocks. So think of this as like we got the reversal of the trend, and this is a continuation of by the dip. It came up, we made a lower high, then we made a higher high, then we made a lower high, and we're getting this continuation type of price action. That type of order block is an internal order block. So I changed the color. I made the stronger order block, which is the swing order block, a darker green, and I left the internal order blocks lighter. And for puts, I made the more bearish, stronger order blocks this darker red, and the internal order blocks are lighter red. So if we go to something like let's look at AMD's daily chart, right? And so this way, when we're on the higher time frames or the lower time frames, you will be able to see where the strongest possibility of a bounce is easier. Visually you'll be able to see it better. So like right here, we just broke through all the most of these internal order blocks and finally made it down to a swing order block on AMD. And you can see how we got some internal and swing order blocks. For bearish order blocks up here at the top. So then if we take something like this down to like the 5 minute or the 15 minute time frame, it also helps you to see the same thing. You can see where the strongest order blocks are and the stronger supply zones are on that 5 minute time frame. So we got some internal ones, but you can see we may break through this, but this one is going to be a tougher one to break through. And we got some continuation sell off, sell to rip internal order blocks. And then we also have up here a stronger swing order block. So I did this so that as traders, we can identify where the stronger order blocks are next to these historical resistance so that when we make a decision to jump into a trade with an arc confirmation down in the demand zone, we can know where the stronger order blocks are at with that color change. Okay. And so with that being said, on the Wolf Levels Pro, Wolf Levels Pro controls our trend lines and our historical support and resistance lines. And it also controls these clouds. So I added some alerts to that indicator. I coded them in. So now if you put your mouse on a trend line or just a historical support and resistance line, you can right click on these now. And so add alert to Wolf Levels Pro. So we already have where you can add alert when a key when the resistance is broken. But what I did is add it here. You can do the clouds individually, so you can do a alert when you have a bullish breakout on the 12 cloud, a bearish breakdown on the 12 cloud, a bullish breakout on the 200 cloud, right? When it gets above it, or bearish breakout. But the biggest one that you all are going to enjoy is this bullish cloud breakout, bearish cloud breakout, and then we have the bullish floating candle confirmation and bearish floating candle confirmation. So now you can alert your floating candles. Now this alert, it isn't pinpoint accurate as I want, but it's pretty much gets the floating candle for the most part. But I have been having a little difficulty getting it to identify it every time. But it is getting it after the trend line breaking, trying to get that candle as the alert. And then with the bullish cloud breakout, it works flawless. So this right here is going to help you catch those parabolic moves. So basically, when the clouds cross up or down, and then after they cross, you get the candles to open above them. Then that's when you get that signal. So for example, like it would have gave us a signal here for a breakout, and this is going to become more of our just our kind of a parabolic kind of breakout type of signal to help us to get, see when we're breaking, like when this is happening. So if we're not watching the chart, or at least our alert can let us know that, okay, we just crossed over the 12 cloud, crossed the 200 cloud, and we can get an alert when these candles open and close above it to shoot up to these higher targets to make bigger moves. So that we have that alert built for the clouds now, and that's integrated into this alert system. And so you can utilize that. So just to touch on what exactly these clouds are. So on the wolf chart, our confirmation for the floating candle uses basically the 200 WMA and the 12 EMA. So the 200 WMA and the 12 EMA. And what these clouds represent is most times when you deal with different traders, some of them use the 200 EMA, the 200 SMA, some use the VWMA, some of them use the DMA. Okay. And so the 200 cloud encompasses all versions of the 200 that I just mentioned, except for the DMA. And so it shows you a support zone or a resistance zone. And so the reason why that's so powerful is that the 12 is the same way as every version of that 12 moving average. So when we get above the 12, we're not only over the 12 EMA, we're over every version of the 12. So that gives us a stronger short term trend detection system. And for our long term trend detection, when we break above the 200 cloud, that means that we're above every version of that 200. So there's no second guessing if we're over the long term trend or what the overall long term trend is. And instead of us trying to just bounce off of one line for support or resistance, we're getting a dynamic zone on the chart. And so this right here makes our floating candle confirmation even stronger because now when we have a breakdown and we have a floating candle, this candle is it's a stronger trend detection now because we're under every version of the 12 and every version of the 200, so we can be confident in the trend direction with these clouds, even more confident than just having a single moving average for the long term and the short term trend, right? So with us having that alert system on the cloud and utilizing this floating candle confirmation system is going to be exactly the same. We're just using the clouds to let us know that we have a true breakout or breakdown. And so, how does this come into play? So, if we look at Apple's daily chart, we can see how it came into play. When Apple bounced, it bounced off of our 200 cloud. So, it gave us a dynamic zone on the chart for Apple to bounce out of. So, let's go to their daily chart. And so, we can see how powerful this system is now. Because look here, we have confluence here with a demand zone, our 200 cloud, and we have historical support and resistance. So when Apple came down to this range, we blew right past the 200 WMA, right? But since we have every version of the 200 encompassed in its cloud, it was still gave us a zone to enter in with a lot of confluence. So we had historical support, we had a buy signal, we got the inverse arc confirmation, and we're with inside of this 200 zone. Now look at this area right here. Apple again, it pushed past, it respected the 200 WMA here. These candles pushed past it, but it looks like so. You look over here to the right. This is a blank space. We got support down here at this demand zone, right? But this it shouldn't have bounced right here. You see that? If you look over here, like this is not an area where it's bouncing at without a moving average or something being here, right? And so it looks like it's bouncing in thin air a bit, but we have our cloud zone over here, so it's bouncing here and here off of one of the 200 moving averages. So since we have this zone here, now we can see, what I'm saying, a zone that we can start dollar cost averaging with shares, or even trying to start building our swing trade position, right? And so even here, right here, we got a floating candle confirmation. So we're above every version of the 200. We have green money sitting right here. Our level two confirmation. Now we have a floating candle that's above the 12 EMA and every other version of the 12. And look, when we're bouncing here, so we're coming down, barely tapping the cloud, came here, bounced inside of the cloud, bounced off the 12 exponential moving average here. We came in and we bounced off of one of the other versions of the 12 here. And then when we lost all versions of the 12 right here, we got an arc confirmation. So we had an entry on this candle, but we also got a strong level two confirmation by being under every version of that 12 moving average to show us a strong short-term trend shift and that we could trust, right? So we got an arc confirmation and we're under every version of that 12 EMA. So with these alerts that we have built into the chart now, you can put an alert directly on the Wolf Trend moving average. You can put an alert for the floating candle. You can put an alert for a regular trend line break. You can put an alert for a floating candle confirmation and the cloud breakout on this chart. So now we have a full operating confirmation system that we can also build an alert system around, so that we don't have to spend a lot of time after we do our homework on the weekends and look for opportunities. We can set our alerts up and allow the chart to manage when it's time to start getting busy in trades, instead of just kind of flipping through every screen, seeing what's happening, right? And so with this option calculator built in, now you can see your option stop loss quicker by just coming in and inputting your option price and your delta, and then it's going to dynamically use the code with inside of this existing ATR tracker code and give you an option stop loss, right? You still have the ability to have position size in here. If you trade forex in futures, you got lot size here. It's tracking the current price, and it's still giving you upside targets based off of the ATR per time frame. So it's a comprehensive system. The upgrades are like extremely valuable. I'll be using all these alerts. I was using some of them last week while I was testing them out, making sure they didn't cause any lag or anything in the chart. But they worked out excellent. The only one I hadn't tested out yet is the floating candle. I tested it out today, and it did okay. And so I'm gonna keep improving the chart. I'm gonna write up a document for these updated things inside of the wolf chart for you all to have. But make sure that you just study this video. Make sure you're always paper trading crypto on the weekend. That's how you really get good at this chart, is actually practicing and trading. So you get good at trading by trading, right? Because if you make mistakes on the weekend and you write a journal about what you did wrong, and then you go at it again, and then you write what you did wrong, and then you do something right, and you say, okay, I got that right. You write that down and write that in your journal. And if you start doing that every night while everybody else is asleep and waiting on the market to open to test their theories out with their real money, you could be practicing on the weekend with Bitcoin and other cryptos, and at night, and then when you get in the market in the morning, you just rehearsing what you already practiced all weekend, right? So that's how you want to do it. And this chart is going to do a lot of the work for you. It's going to chart everything out for you, and it keeps itself up to date. And as you already know, we just got these alerts and stuff like that. That's game changing. And so what you got to spend your time on is learning the confirmation system, and then finding the opportunities. And then once you find something great, you tell the pack about it. All right. If y'all need anything, just reach out to me in either Chris Sain Discord, D-Fresh Discord, or the gas station. I'm in those three Discords. Ours is coming. It's not here yet, but for now, you know what I'm saying, we just gonna kick it with Coach Chris, D-Fresh, and the gas station if you all are over there. And I look forward to working with you guys and going to the next level.